Stay tuned, because in this video I'll show you exactly how to set it up, how to enter the trades, and how to manage risk like a pro. Let's jump right in. Disclaimer: this video is for educational and informational purposes only. Trading involves risk and can result in the loss of your capital. Always test on a demo account first, and only trade with money you can afford to lose. I am not providing financial or investment advice. Step 1. Add the indicator. Go to the chart. Add Keltner channel. Settings: EMA 30, ATR 15, Multiplier 2. Time frame: 15-second candles. Step 2. Understand the rule. When a candle closes outside the channel and then moves back inside, it signals a reversal. That's our golden entry point. Step 3. Sell trade example. Price closes above the upper band. Next candle drops back inside. Enter a 1-minute expiry sell trade. Step 4. Buy trade example. Price closes below the lower band. Next candle pushes back inside. Enter a 1-minute expiry buy trade. Pro tips: look for wick rejections, stronger signals. Avoid trades if the breakout candle is too big. Stronger confirmation if price is near support or resistance. Risk management: risk only 1 to 2% per trade. Stop after 2 consecutive losses. Keep sessions short. 10 to 15 minutes max in OTC. This is not a get-rich-quick method. It's all about discipline and consistency. Now that you know the full rules, let's jump into live trade examples so you can start practicing this strategy. And if you're new here, hit subscribe so you don't miss more strategies like this. Alright guys, let's break down this live trade example. Here you can see the market was in a strong downtrend, and finally, one candle closed well below the lower band of the Keltner channel. This is the exact setup we're waiting for. On the very next candle, notice how the price re-entered back inside the channel and showed bullish pressure. That's my confirmation to enter a buy trade with a 1-minute expiry. As the candles moved forward, you can clearly see the price continued back inside the channel and pushed upward, giving us a winning trade. This is a classic Keltner channel breakout reversal. The spike tries to break out, fails, and the price snaps back inside. And here's the result, guys. This trade finished in the money. This is exactly why the Keltner channel breakout strategy works so well in OTC. It helps us catch those fake breakouts and turn them into winning opportunities. All right, guys, here's another example. This time I went for a sell trade. Notice how the price pushed above the upper band of the Keltner channel and then quickly dropped back inside. That was the correct reversal signal. But here's the issue. My entry came 2 candles late. Instead of catching the first rejection candle, I entered a bit later. Because of that, my risk increased. Sometimes the move continues in your favor, but other times the momentum slows down and you don't get the clean result you want. This shows us something important. With the Keltner channel breakout, timing is everything. The best results usually come when you take the entry immediately after the breakout candle re-enters the channel. If you enter late, the setup can still work, but the probability of winning goes down. And here's how this trade turned out, guys. Even though my entry came a little late, the market still moved in my favor, and this trade closed in profit. Here's a perfect sell setup. Notice how the candle pushed above the upper Keltner channel band and then immediately dropped back inside. That's the exact reversal signal we look for in this strategy. So right here, I entered a pot trade with a 1-minute expiry following our trading rule. As the trade progressed, you can see the market continued moving downward inside the channel. This confirms that the breakout was a false spike and the sellers took control right after the rejection. This is why it's important to wait for the candle to re-enter the channel before entering the trade. It gives us higher accuracy. And here's the result. Our 1-minute sell trade closed in profit. The price stayed below the entry point, giving us a clear win. This is a textbook example of the Keltner channel breakout strategy in action. We spotted the breakout, waited for confirmation, and entered with discipline. Here we've got a perfect buy setup. The price first touched the upper Keltner channel, then dropped all the way to the lower channel and even closed outside of it. On the next second candle, price reversed and closed back inside the channel, which gave us the confirmation to take a buy trade with a 1-minute expiry. As the trade unfolds, notice how the market continues to push upward inside the channel. This shows us that the sellers failed to hold the breakout and buyers have stepped back in. This is exactly the kind of momentum shift we want to see. The false breakout gets rejected and the price snaps back inside. And here's the result. Our buy trade closed in profit. The price respected the Keltner channel reversal perfectly, moving back inside after the breakout and continuing upward. This confirms why patience and discipline are so important with this strategy. Now that this trade is done, let's get ready and look for the next perfect setup in the market. All right, guys, here's an interesting example. I entered a sell trade here, but notice something important. The breakout candle was very big. Now, if you remember from our trading rules, we usually avoid taking trades when the breakout candle is oversized, because big candles often mean the market has already made its move and reversals can be weaker. As the trade progressed, you can see the price struggled to continue downward. That's exactly the risk with oversized breakout candles. The momentum is already extended, and many times the market will either slow down or even reverse back against you. I only took this trade as an educational example to show you why big breakout candles are risky. The safer entries are usually when the breakout candle is small to medium-sized, and then the price re-enters the channel with confirmation. So remember, discipline is key. Even if this trade ends up in profit or loss, the important lesson is stick to the rules and avoid oversized breakout candles. And as you can see, this trade ended in a loss. This is exactly why I always remind you to avoid oversized breakout candles. I only took this trade to show you what happens when we break the rules. The strategy itself is powerful, but discipline is the real key to consistent results. Losses are a part of trading, and that's why risk management is so important. Remember, trading is not about winning every trade, it's about managing your account smartly. If you found this video helpful, make sure to hit like, subscribe, and turn on the notification bell so you don't miss my next strategy breakdown.